Doc. Sean Duncan with SMD Consulting and Accounting again. Today, I want to talk to you a little bit about what I call the three categories of deductions. We all like getting deductions off our tax return, so let's talk about some general rules that might support you as a practice owner or self-employed physician. Now, those of you that are W-2, don't worry, we got video coming up for you later as well. But go ahead and watch this. This is useful. Before we dive in, as you know, disclaimers. Okay, so now the disclaimer is out of the way, let's jump into this. What are the three major categories of deductions? Now, I created these rules. These are my rules. This isn't something you're going to go out and Google and find online. This is just really something we created as a firm to help our practice owners understand what they can do and what they can't do without calling us every single time. Now, granted, we want you to call because we want to make sure you do this right, but we do want to empower you to make decisions without asking permission every 5 seconds. Before we jump into them, what I want to do is teach you two major words for the IRS. Really simple words: reasonable, customary. What the IRS looks for a lot of times is this expense reasonable and customary for the type of business you have? Now, again, in a medical practice or self-employed physician or a smoothie shop or a coffee shop, it's really looking at those deductions. So, for example, if you owned a smoothie shop, do you need a backhoe? Probably not. That's a construction thing. So the same rules apply. There's a lot of logic behind this. As much as the IRS seems illogical, there is a little bit of logic behind it. So the three categories. The first category is when you look at that expense and say, there is no way I was going to spend money on this if I didn't have this practice. You wouldn't have rented an office or purchased a building for your office. You wouldn't have hired employees. These are the obvious expenses. This does not require us. This is the stuff that you pretty much know that you have to spend and you wouldn't have spent had it not been for a practice. So we can kind of move on from that one. That one's the baseline. This is the obvious stuff. The second category is where we start to come in and help you. This is when you go, well, you know, I probably would have spent this money, but I really, really do use it for my business. I don't know, does it count? Does it not count? Is it personal? Is it business? Cell phone. Did you use your cell phone to have patients reach you? You probably did. Almost every physician I know does, because there's always an emergency need. Now, again, you might have a personal cell phone, you might have a business cell phone, but just generally a lot of physicians use their personal cell phone for a business expense or for a business purpose. So it makes it a business expense. Mileage. Now, driving to and from work doesn't count, but maybe you have your office and then you have to go off to another hospital, or you have to go meet a physician, or heck, you have to actually go meet a CPA. Who wants to do that? It's those other expenses, your iPad, your laptop. Maybe you do have a full-blown home office setup. I've got a radiologist with this amazing home office. He's got everything configured and it's 100% dedicated space. These things count. So, but these areas is where people start to get a little fuzzy. They start to push it. Well, you know, that car that I have, that new Ferrari, I put a magnet of my business on the side, so that means it's a business expense. No. You may have bought the Ferrari anyways, but it doesn't necessarily mean that it's a business expense. This is where the IRS starts to get some rules where they give you guardrails. The entertainment expense used to be something that was allowed, and it's not. So, for example, if you want to take somebody for a round of golf to schmooze them, to get to know them a little bit better for whatever it is for business purposes, that may be a business thing, and you would have probably gone golfing anyways, but you brought that other individual. The IRS specifically disallows that. But going for a meal, they allow. So these rules move as the tax laws change. And by the way, in 2018, they had the single largest overhaul to the tax code since 1986. So when I say rules change, sometimes they can completely change. Now, the third category. This one, I really recommend you do the proactive phone call when you reach out to a CPA. Like, call us before you do this. Unfortunately, thanks to TikTok and Facebook and goofballs like me on YouTube, people are acting on information they're learning online without consulting. It's the ones where you go, hey, Sean, how do I turn this into a business expense? These are the creative things. These are the ones where people are telling you, I can beat the system. Maybe they're allowed, maybe they're not. My favorite example is travel. So if you want to go to Maui, how can I make Maui look like a business expense? Now, we're not trying to turn a business thing into a personal expense into a business expense. We're not trying to break any rules. It's how do I marry up these two things? I do a lot of professional speaking. I do a lot of continuing education. I like to travel to places I want to go to do those things. When somebody invites me to speak at a medical conference, if you tell me it's in Minnesota in the winter, and by the way, if y'all are in Minnesota, nothing wrong with it. I just don't do the cold. So if you say Minnesota in the winter, I want to go. You go, Sean, we really need you to go to a conference. And gosh, it's in San Diego. I'm in. I'm on that. So it's like where I want to go. So how do I turn that Maui into a business expense? Conference, go speak, do something that makes the business purpose. Make it a business purpose to be there, not just, I want to go. What I don't want you to do, and this is what real estate agents are just notorious for, my real estate investor clients. Oh, well, I flew up to Napa and I was looking at some wineries, and maybe one day I'd like to buy a winery. And I collected like 5 real estate agent cards. Look, y'all, you went to Napa. We know what you did. You did not go out there for business. Now, if you eventually buy a winery, man, we can go back and catch those expenses. But what I don't want you to do is game the system, because if you feel like you're trying to beat the system and you're getting a little too cute without professional advice, probably disallowed. So 3 categories of expenses. I would have never spent this money had it not been for the business. The second category is, well, I probably would have had this, but I use it for business, and it might be allowed, and it probably would be allowed. And the third category is, hey, Sean, how do we turn this into it? Doesn't mean we can always do it, but let's look at it, discuss it, and see if it is reasonable and customary and allowed. Above all else, consult your professional. Whether it's us or another CPA that focuses on advice, make sure that you're leaning on the advice. You don't want somebody just randomly going off to some random person to do surgery without professional consultation. We kind of feel the same way. We don't want you to get in trouble. We don't want you to get hurt financially because you just decided to, shoot from the hip and do something crazy. I hope this was helpful, guys. We got some more coming up for you. Hey, Doc, thanks for coming.